Hey folks, Jeff here, the rate update. Today we're going to talk about down payment. Well, actually down payment assistance. So don't go away. We're going to talk about that next. Okay, so every day I get the phone call about down payment or down payment assistance. So I figured I would do a video kind of detailing as much information to you guys as I possibly can give you. So what is down payment assistance, or what is a down payment, and what is actually needed to buy a house? So let's break it down. The first piece of the puzzle is the misinformation out there is you don't need 20% as a down payment when you're buying a house. You don't. Most cases, it's about 3 to 5%. Okay, so that's that part of it. However, where people, usually a lot of times the flaw in that system is you need that amount plus other costs. So I'll say, there's a couple other buckets involved when you're buying a house. So let's look at a $100,000 purchase. Don't laugh, it's just a nice number to use. Good luck trying to find a $100,000 house in today's market. But let's just use $100,000 for an example. So in this example, we're also going to say you need 3% down. So you're saying, Dan, I got $3,000. I'm good to go. No, there's more to that equation. So other pieces of the puzzle are this. When you're looking to buy that house, one of the first things you're going to do, most likely, is get a home inspection. Now, it's not required by law, but you're going to probably want to get a home inspection if the house is a little bit older. Okay, that's probably going to cost you $300, $400, $500. So that's not a part of the loan process, but I'm just saying, you have to have a little bit of extra money for all these other, I'll say the add-ons, okay, or the a la carte items. All right, so now let's look at the loan. You put in a bid for that $100,000 house and you get it, they accept your offer, and now we're breaking down the numbers. So the first thing is you need the 3% down, which is $3,000. All right. The next thing is you're going to need an appraisal on that property, and the appraisals are normally costing you about $500. So there's another $500 into that kitty. The next piece of the puzzle, let's break it down into lender costs and legal costs. Okay. So the lender costs, you're normally going to have about $1,500 in lender costs between credit reports and processing fees and a whole bunch of other things is $1,500. I'm going to write these down so I keep track of what's going on. So we have $500 for the appraisal fee, $1,500 in lender fees. Now there's going to be legal fees. Okay. You're probably going to hire an attorney. It's probably going to be $500. We'll write that down. And then now what the attorneys do from the seller side and the buyer side, they go out there and they get what's called mortgage insurance. I take that back. Title insurance. Okay. What title insurance does, and it's required on mortgages, is it insures me, the lender, that I'm getting a claim on that house as a mortgage. We're going to have the first mortgage and the only lien claimed on that property. Okay. Everything else in the background or in the past is obsolete. They're insuring me that I have clear title to the property as well as you. Okay. So you don't have to worry about if, somebody missed a tax bill. You don't have to worry about it. Let's say somebody put on a roof to your property and, or the other person's property, you bought it. And then next year you got a guy pounding on your door saying, hey, you owe me 10 grand for a roof. That nice roof you have up there, you owe me 10 grand for that because you never paid me. It's like, I didn't even own the house. So that's a title insurance claim. Because they missed it, possibly, you don't have to pay that. So it's ensuring you that you have clear title to the property as well. Okay, that can range from about $2,500 to about $5,000. Let's go middle of the road. Let's just take an easy scenario there of $2,500. Okay, so right now, so far, we have $3,000 as your down payment. We have $500 for the inspection fee, $1,500 for the lender fees, $500 for your appraisal, $2,500 for your title fees. Okay, you can see how it adds up. All right, that's the whole point. A lot of people have that minimum down, but they don't have all the a la carte items. So that's where down payment comes into play, or possibly lack of, and your down payment assistance programs kick into play. So here's one of the biggest ones we have that's national. But then once I go through this information with you, I'm going to show you all the state and local programs we have, and there's a whole slew of them. So let's go over right now what it looks like for our national program. All right. So our nationwide down payment assistance program, what is it? Well, let's go to the next page. Targeted clients, borrowers that have achieved financial stability, borrowers with lack of down payment or reserves, borrowers that have demonstrated the ability to save, no seller credits, and all the other stuff. So just a kind of little target client. Basically, I would say my target client is those that lack the down payment. Okay, that's the easiest way to put that part of it. And then the down payment assistance program. We are offering right now the FHA piece. The conventional and power purchase is on its way, but I don't have those right now. So you can get an FHA loan with between 3 and 6% assistance. Okay, so let's dig in a little further than that. Within reach for FHA loans. Within reach is a competitively priced government loan program that does not require minimum down payment. It can give you 3, 4, 5, or 6% assistance. Those can go toward your down payment, closing costs, as we said, earnest money, prepaid items. What a prepaid item is, let's say, for example, we have to hold an escrow for your real estate taxes and your homeowners insurance. Now, let me explain that to you. So also a piece of this puzzle that I forgot is on average, we have to hold about 3 or 4 months of your real estate taxes and your homeowners insurance. So what we do is we take the real estate tax bill, and you can find that in any county website. So if you're looking at a house, I always say, look at that tax bill, okay? So take the tax bill divided by 12, and that's how much it's going to add to your monthly mortgage payment. You do the same thing with the homeowners insurance. We take your homeowners insurance premium, divide that by 12, add that to your mortgage payment. So what happens each month is when you send in your payment, a piece of the pie gets pulled out for and goes into your homeowners insurance escrow, or AKA savings account. And the same thing happens for your real estate taxes. So again, on average, we're going to hold about 3 or 4 months of each one of those. Let's say your taxes are $200 a month and your insurance is $100 a month. So that's $300 a month, and we're going to take 3 months reserves or savings of that. So you're talking almost another $1,000. Okay, so you can see how it adds up really fast. All right, so now let's get into, within reach, the FHA program. So there's no minimum investment from the borrower. It's a 30-year fixed, fully amortized loan. You can use it in manufactured housing. The conforming loan limits for FHA applies. And the down payment assistance is calculated off of the total first mortgage amount, okay, including the upfront MIP. So what that means is it's based off of the loan amount. So this is an FHA loan. It's required that you put down 3.5%. So your actual loan amount is 96.5% of the purchase price. Okay, I'm going to leave it at there. You can also add in any of the mortgage insurance premium that FHA charges, but I'm just going to throw that out the window right now. So $100,000 purchase, you're going FHA, means you have a $96,500 loan amount. All right. So that's what these programs are representing when they say the assistance, and it's based off of that amount. Okay. So it'll make more sense here in a second. So then we go to the next page. Between a 640 and a 659 credit score, you can go with a 3, 4, or 5% assistance program, but your maximum, what we call the debt ratio, cannot exceed 45%. Well, 45% debt ratio is this. We take your monthly expenses, all the bills on your credit report, plus your proposed mortgage, divide that by your gross monthly income. That, in essence, is what we call your debt ratio. It's your monthly budgeting factor, in essence. If you have a 660 score or higher, as long as we get an approval on your loan, the debt ratio doesn't matter. We've gotten approvals up to 57% debt ratio, and you can go 3, 4, 5, and 6% assistance. Okay. One of the biggest caveats, though, is you have to fit within 160% of the area's median income. I'll try to put that link down below, or you can just Google 100. Honestly, you can really just Google this. 160% of the area median income. Put in your information, and it'll tell you what your income needs to be or cannot exceed. Income limits are calculated from income from the IRLA, so don't worry about that. You cannot have any non-occupant co-signers, okay? No co-signers or non-occupant co-borrowers, all right? Borrowers must occupy the property as their primary home as any FHA loan, and at least one borrower must complete the homeowners counseling program. And it's an online system. It'll take you about 15, 20 minutes, and 100% of the people pass. The next thing is if the borrower is paying rent. Here's some of the verifications that are needed on this program to get you qualified. If you're paying rent right now, we need to make sure you've never missed a mortgage payment in the last 12 months. Okay, and we do it by this. If you're living rent-free, then we need a little bit of reserve money after the fact. What reserves are is basically after all the money that you need to apply for the closing, you have to have at least 3 months of your mortgage payment still remaining in your savings account. Okay, so that's the biggest caveat there. Here's an example, and this is, I didn't do this, but it's a pretty extreme example. If the purchase price is $450,900, we do a lot of properties in California, and that is, fortunately, unfortunately, a starter home. All right, it just shows you how this blends out and how much money you would get as assistance. So you can see all the way up to 6%, you're going to get over $20,000 to go toward your purchase. All right, as an assistance. So you can use this as your complete down payment, closing costs, escrow setup, everything. It normally doesn't make sense to do the 3% program or even the 4% program in a lot of cases, especially in lower loan amounts. Usually we're looking to do the 5 or 6% to really make it worth your while to do. All right, it's a soft second mortgage. What that means, it's a 5-year mortgage, but there's no interest and no payments required. And as long as you're in the property for 5 years or more, it gets completely canceled out. You don't have to worry about it. The kicker here is if you refinance or sell the house within the 5 years, there's a prorated factor that is required to be paid back on that loan. So make sure if you're getting into this program, don't just jump into it. Make sure you're going to be in that property at least 5 years or you're going to pretty much owe the money back. All right, so that tells you that part of the equation. The soft second, no payments are required. There's no second mortgage filed. There's no second mortgage approval process. We lock you in. We basically do all of this for you to put this through and make it as seamless as possible. Any questions? That's it for that. So now what I want to talk about are some other programs that we have available to you. So let's get on to that part of the puzzle. So this now shows you all the programs that we have within our system to fit you into any down payment assistance programs. The one I just showed you was a national program we have. We have a couple of them, but that was the most lucrative. So let me go through the two that we have that are throughout the whole country. Those are broken down right here. Okay, it gives you, again, the 660 credit score down here that you can see. You can get up to 6%. This is factored in the 450. So that's that program. So we just went over the national FHA program. Now we have a program called Chenoa, and it actually goes through, these rates change daily, but it can actually give you up to 5% down payment assistance on that as well. So we have two that are national. We have several more that are national. But what I do want to show you though is here's a list of all the down payment assistance programs we have. That's why we need you to call. I'm not trying to be, reach out to you guys and say, hey, call us so we can, strong arm you to get into, use us as your mortgage company. But here's why. Just because these programs are out there doesn't mean your lender has the ability to get those for you. If you're working with a broker, you probably have no options to you. I was a broker for several years and I did not have an outlet for any down payment assistance programs. But let's go into and just show you screen after screen after screen that I have. You can pause these as we go through. And if you see something on here, you're like, hey, Dan, that, what does that do or whatever? Let us be your mortgage consultant and compare all these options that you have available to you and see what's best for you. So you go through it. Let me just scroll through this. Okay, that's page 1 of many more. There's page 2. Page 3, and they continue. Page 4. Okay, that's how many we have just on this chart right here. There's 4 pages. There's probably over 50 different down payment assistance programs that can be used at your disposal. So that basically is down payment assistance in a nutshell. If you have any comments, please list them down below. Email me. I'm going to give you my information and our website so you can go there and find out more information and figure out how you reach us as well. So what I need you to do is, if you're interested in doing any of this, go to therateupdate.com. Hold on one second. I got to log into that so I don't keep you hanging. And right here, what I suggest you do is skip all this and these and that. Just go here, give us a call, 844-775-LOAN. Or, that's a new feature we have, I'll get out of that right now, schedule a meeting. Don't apply, because we need to talk to you to figure out what you're working with. Make sure you're comfortable with us, make sure we're comfortable with you, and make sure we put you in the right program by getting all the details from you. What I ask you to do is go here, schedule a meeting. It's going to open up all the times that we have available. It'll give you the days and times. And I'd like to do this by Zoom if possible. If not, we can do it by phone. But if we do it by Zoom, we can actually show you the different programs we have and break them down for you individually to see what's best for you and you alone. So that is it for today, guys. Thanks you so much for watching. Don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. I'll see you later this afternoon with my mortgage rate update. Take care.